Welcome back. We are, of course, discussing SAMVAT 2075 stock ideas, sector ideas, and our guests are with us. Ramdev, while we want to talk about this, this comeback of Indian equities, the fact is that if you see this month or this year, our market performance is absolutely in line with the MSCI emerging market and MSCI Asia ex Japan. I mean, month to date, year to date, both are absolutely mirror image of what the emerging markets and global markets have done. We had Akash making some points on global markets. You have also seen so many of these cycles. In terms of the move in the emerging market versus US market, are you sensing some kind of decoupling now over the last, say, 1 month or so? And do you think perhaps even some FI money will now start to come into the emerging market and Indian markets?
No. I mean, unless we see the money, at least unless we see some kind of trend that 15-20 days continuously they are buying in, I would think that they will continue what they are doing. So, but there is no, and I don't think anybody has any extra insight on that. Till the money starts coming, you cannot say that it will come. There is no guarantee. Even for the domestic investors, howsoever close we are, we cannot say that money flow, which has reduced by at least 50-60%, will that go back? I mean, it can go back because money is sitting on the side. It has not gone into real estate or something else. So risk appetite has gone down, and even recent performance has not been great. So all the portfolios which came in last year, they're all in negative, and that once your performance is negative, then generally in the public who have come first time, or they're not very encouraged to again put up money on top of it. So you need extra reason, say like political developments, oil tumbling to 60 or something like that. So some, or maybe capex picking up big time, employment generating big time. So some kind of or sustained again performance in the market. So, but performance in the market will come only because of two things. One, buying by any of the segments, or the accelerated earnings growth. So both are looking very elusive right now.
Okay. Well, I want to come back to the sector discussion, but just to take the foreign interest argument forward. Some people speak of an algo trade. When we were deserted when crude went to 86, and you saw, as you said, record outflows in that month. But with crude receding, you could see the algo reversing. What's the in-house view at Morgan Stanley? And do you think that 86 was always unsustainable, and therefore we could expect a shift in
So firstly on the emerging market, so firstly on the emerging market thing, our emerging market strategist has been cautious on EM. And a lot of EM indices have hit its target price more recently. So they have all fallen as much as they have. And I think Anuj asked this question on decoupling, which is I think a relevant one, because the SPX relative to EM outperformance has been at record highs and is now topping out seemingly. So EM has started outperforming. So there could be a shift that may be underway. We don't know. It's still a market in transition. As far as oil is concerned, the house view is that we are actually bullish on oil. But there has been breaking news overnight, which we can't ignore. And for all these weeks, the market thought Iran was not in the market, and now suddenly Iran is back in the market. So the supply dynamics has changed. Also, a lot of US production has come back as a consequence of higher oil prices. So suddenly, the supply-demand dynamic looks different. And if Akash is right, and if global growth is slowing down, then again that puts pressure on oil. So this could just be a sweeter space for India in that sense. But we'll have to wait and watch and see how it pans out.
Akash, in election year, there's also a possibility of self-goals, right? We saw perhaps one play out with the oil marketing companies, and the fact that government said, okay, 1 rupee you'll have to absorb, and we saw the kind of market cap damage. Is there a risk that as we move into the big state elections and, of course, general election, perhaps something big like a big farm loan waiver or something other could damage the overall macros once again?
I mean, this government, obviously that risk does exist, but I don't think there's anything, it's famous, but it doesn't look like anything on the horizon which could be of the magnitude which could, dampen or cause a fiscal shock of the extent which would really damage the markets. This government till now has been reasonably disciplined in terms of their fiscal outlook. One thing they have done is by and large met their fiscal targets and goals. So hopefully, could there be some slippage on the fiscal deficit this year? Yeah, it's possible. It's an election year. GST is the first full year transition. It's possible. So I think people kind of look through that. If it's 20, 30 basis points, I don't think people are going to fret too much about that. I don't think it's in the DNA of this government to do some overhauling, you know, some dole out or some bailout or something of lakhs of crores, what you would need to really shake market wisdom. I don't think that's likely, you know. But this is politics. I have absolutely zero understanding of the political dimensions and compulsions of elected governments. So I wouldn't put it past them. But I would think the odds of them doing something on a scale which would scare market participants is very, very low. It has to be really large scale. You know, if you have to blow the deficit by like say, 1% of GDP, you know, which is like, you know, 100 lakhs, more than a lakh, 1.5, 2 lakh crores. That doesn't look. And what capacity does the government have to spend 1.5 or 2 lakh crores in a matter of 3-4 months? I mean, the government, if they want, they can't spend it.
No, that is the problem. Yeah. There is a fiscal math that is not adding up because, okay, only for 1 month we got GST at 1 trillion. The asking rate is 1.1 actually per month. So we are short by maybe 50,000 crore.
I think that people are expecting now. I don't.
No. And my question, that is the preface to the question. Therefore, this institutional shock, putting your hand in the RBI capital, that itself may not disturb. But if that ends in the showdown, which was averted, but if that showdown were to happen again,
no, I agree with that. I think.
No, will that be very bad?
Any institutional shock?
Yeah, as in if the governor resigns.
Of course. Because I think in any market, any environment where you have two very respected institutions like the Reserve Bank of India and the Finance Ministry at loggerheads, and if you play out your scenario that God forbid that it leads to someone actually resigning, I think that's an unambiguous negative because it attacks people start questioning, you know, autonomy. People start questioning, you know, the type of people who are in government, what's going on, and stuff like that. It will definitely spook people. I mean, I don't think you can paint any scenario where this is not a negative. If this were to go in the direction
there are those in Delhi who have even tweeted to me today that if oil is at 72 and the rupee goes to 72, then you know, those are the fundamentals that matter. A showdown or a resignation, you know, can be stomached. You think if all these macros work to our advantage, this will be no.
Sorry if I may say, the institutional credibility takes years and years to build. This, whether oil is 72 or oil is 85, oil is 35, these are transient. Rupee 72, these are transient. You can't. I don't think you can trade off a price of oil and a price of rupee, which is a particular point in time, with long-term institutional conventions, credibility, nodes of, you know, the way you approach problems, the way you discuss and consult. I think,
no, this argument is more that we are overstating the importance of this event. You don't think so, Ramdev? You think it can have a big damaging impact?
No. I mean, see, whenever you disturb any institution, it will have its own. I mean, there could be 10 pluses, but this minus will remain minus. What is wrong is wrong. So, I mean, you cannot compensate that you got in maths very good, but you failed in English. So, you failed in English.
Okay.
So, it's like that, you know. You remain failed in that particular aspect of it, and you'll have to permanently, I mean, in many jobs you cannot apply if you're failed in English. So, that kind of thing, you know.
Let's discuss some more sectors. Ramdev, the one stock which has come back, I'm not asking you a stock specific question, but you know, Divi's Labs, for example, from last year's big problems, went to 52-week lows, and the recovery to all-time highs once again. You know, a lot of people are asking, can the entire pharma sector do the same? And so there's a bit of a flash in the pan move that we have seen in some names like Aurobindo Pharma, Sun Pharma here and there, but still way off their highs. So can something like Divi's repeat with the entire sector, you think?
Yeah, quite possible. In the sense that the right to win for the entire sector in the global marketplace in generics, this thing, there is no alternative to India. So whichever company gets its strategy right, products right, rollouts right, or permissions right, they have the right to win big way. And Indians are very smart. I mean, all the companies in all the fields, I mean, they are winning very slowly. They are going low end. I mean, you see in IT what happened in 90s, they were doing purely staffing service. There was not much of value add. Then they started doing ERPs, then web development, and now they are taking very complicated projects like $3 billion projects, completely buyouts and all. So this is how it happens. I mean, in pharmacy also, the bigger companies, the 5-6 bigger companies, they have the same kind of ambition, and finally they will go to even do the research on the new molecules when they have that kind of balance sheet, and they will even attack that particular segment, which is the most juicy and very, very large. So I don't have any doubts that the competent companies, that top 4, 5, or 6, they have chance, I mean, very high probability that they will come back, whether it happens in, as you said, second half of this year or after 1 year or 2 years, I think. But it's a writing on the wall. It will definitely come back.
You know, in this big 2017 mid-cap, small-cap boom, one of the sectors where we seem to have got several fundamentals right is this chemicals industry. You know, graphites, specialty chemicals. Is that where you will hunt for value, Rhythm?
I think industrials are offering, so you'd put it, you know, industrial stroke materials, domestic materials are, I think, offering. So
you would include steel and stuff like that?
Steel is global material, so it hinges on global prices, but you know, stuff that is domestic oriented, is capex oriented, industrial oriented, I think there's a lot of value. The mid and small caps are trading at like 0.5 times book, 0.6 times book. They've been crushed, and for sure the earnings are depressed, and you know, when the earnings come back, I think these stocks will get re-rated. So that's certainly a space I would be very bullish on.
If I may add that, I think there's also a clear play that is a fundamental change in China's approach to pollution with the chemicals. So the reason why there's, I think, a paradigm shift there is that China has adopted the blue skies policy, under which there has been significant attempt to reduce pollution. So the entire industrial zones which have been shut down, which are heavily chemical oriented. So you see in many multinational companies no longer comfortable with only having a single source coming out of China, because the predictability is reduced, as well as prices have gone up dramatically. And if you look at the rest of Asia, the only other country with any chemical complex beyond China is India. So there's, I think, a genuine long-term secular opportunity to gain market share for Indian chemical companies, which is very much linked to China raising prices and becoming less reliable as a supplier.
Okay, sorry Akash, if you want to extend that argument to paper as well, we've seen, you know, of not too many listed stocks here, but there are 2 or 3 large ones. There's plastic ban, of course, in India, and we've seen some of the earnings play out. So something similar you think can happen with paper stocks as well?
Frankly, paper is so small a market, I frankly don't even look at it anymore. I'm sorry, I can't comment. I don't even know which is listed in paper anymore. Yeah.
Rhythm, have you done any work on this?
I haven't, but I think it resonates with the point that Akash made. So capacities around the world are shrinking. There aren't that many manufacturing locations that can offer the competitiveness that, you know, the east of the world does, and China is, you know, is defocusing all these things. So there's an opportunity set for India. Actually, there's a broader theme around this, which comes out of the trade war between India, the US and China. India has to be very quick to capitalize on this. We can actually get a lot of manufacturing, and finally the Make in India thing can happen as a consequence of companies requiring or needing to diversify their manufacturing location. India is a pretty viable place to do it. So this ease of business is getting better. I think for the first time I'm sensing that boards outside India are not so frightened about greenfield in India. They've been forever frightened. They've not hesitated in acquiring. So that has been okay for them. Take an existing business and run it. But setting it up from scratch has been something that they've been hesitant. I think now is the time when I see that there will be companies that will walk in and say, okay, let's set up capacity from scratch.
That's ease of doing business for you?
Maybe.
Okay, we have not discussed the interest rate theme. Do you think that that can, I'm taking it along with this debt market problem that is currently underway, will it make the cost of capital so expensive? Who are the winners and losers of this trade?
I think clearly the so-called questionable, the growth of NBFCs, larger NBFCs which came under stress. I think they themselves must have realized that if liability franchise is not with them and they're dependent on banks particularly or mutual funds, I think that is not a very reliable, you cannot have ALM mismatch in that kind of situation.
Yes.
So you got to have a good, in fact, for the first time, at least for me, I'm understanding that banks are really precious who have the best liability franchise. Even if their asset book is not doing very well, but if they have a fantastic liability franchise which is reliable and long term and growing, I think that is a huge source of value creation right now.
Okay, actually, let me spin the question.
Yeah.
What I was going to ask you was, do you see a high interest rate scenario? And, there are other reasons for this. There are people who expect that the food disinflation was very severe and it is over. Sugar prices already globally have gone up. And, of course, crude could add to it if it worked the way Morgan Stanley is predicting. So, is there a rate hike scenario, and therefore do you have to think of different kind of discounting? What's generally the interest rate scenario you're looking at for 2019?
No, my understanding of the subject is limited, but the MPC, Monetary Policy Committee being last 2-3 years, it is there. So we are more or less sure that interest rate will not go beyond 5% or 5.5%. So once but then inflationary expectation in the minds of the people have not come down to 5%. So that's the gap. In fact, that is one of the biggest opportunity, because your inflation remains at 5%. You take the rupee from 64 to 72. So that devaluation of rupee or making your exports competitive is real, because your cost side inflation is only 5%, whereas devaluation is at 10-12%. So this time, my sense is, with a gap, it will respond. The export surge and the US-China trade, that will also open up opportunities.
Okay, one word answer from all of you. The biggest bet for next Samvat, Ramdev. Let me start with you. The biggest bet for this Samvat.
Yeah, so always the biggest opportunity in India is to remain invested. Be in the market. I'm telling you, this kind of questions you keep asking, whether it will go to 5,000 points less or more. We can keep discussing. This is a trading kind of situation, but actually, if you want to make serious money, I have seen in 40 years this index going from 100 to 35, 33, 34,000. So that same opportunity, or even bigger opportunity is there in next 10, 15, 20, 30 years. So all the youngest country, they must buy. That's the real opportunity.
No, that point is taken, but still give our viewers a Diwali gift. What is the stock of Samvat 2075? Stock, sector, anything, insurance, whatever comes to your mind.
Yeah, so
Divi's Labs. No, Divi's Labs, Pharma.
I think
what do you think is a good outperformer?
Auto would be one of the good segments to look at it. And even the private financials, particularly mid-sized bank, which is doing very well, which has a management in place, and liability franchise is just about to be built. Good thing is that there are a lot of banks in India which are under construction, work in progress. So wherever this magic is happening, where they are reaching the critical size and they have got the brand equity to attract liability, I think those are the banks which are going to do
bank
well.
Building its liability, RBL. Okay.
No, I would like to discuss long term all the time. The hazard of this job is that we have to ask, of course, near term questions sometimes. But Rhythm, your top bet for next?
I would say mid-sized corporate banks.
Okay.
Akash?
Okay.
This is definitely not going to work, because I'm going to say exactly the same thing, which is the private sector corporate bank. So by definition, you should not buy them, because all it's too much unanimous.
Sometimes we go right, Akash.
Consensus actually works a lot of times. It's only sometimes that the consensus.
What did you all did? You did some phone a friend or what?
No. It actually looks like a paper looks like a pretty obvious trade.
Yeah,
We'll see.
I think the loan cycle is turning. The competition of NBFCs has receded. Mid-sized corporate banks actually half decent liability franchises. Rates are a little bit higher, which is good for them. Their margins actually perk up a bit. They will gain share. NPL cycle is behind us.
Okay.
It looks quite, and valuations, most of them are sub one-time book.
Just that they should
You're
not
not
be,
paying book value for any of them.
but there should not be issue of promoter holding, and whether RBI comes and says, okay.
No, but in some of them that is not there.
In the
No?
mid-sized
That is
corporate
not
banks,
there.
that's not there. Mid-sized corporate banks, that's not there. These are actually banks that have been around for a really long
Yes, yes,
time,
yes. Okay.
and they've managed their businesses pretty well.
Yes.
They've been at the wrong end of the cycle.
Yes.
They've just taken a bit, hit.
Some of them are
because-
south-based,
Yeah, I mean there are lots of them.
Yeah.
Okay. Well, I think we got the message for SAMVAT 2075. More bang for your bank. That seems to be the message. Gentlemen, thank you very much for joining us, and have a great Diwali, all of you, your families, your companies, and we'll of course be Group 2076.